our estimates.
All right, okay, so some relief coming in there. Ekta, thank you so much for making sense of these numbers for us. Well, it's time for some exclusive opinion coming in from BSE member and market maven Ramesh Damani on why value buying goes a long way and why is he bullish on PSU players, the defense opportunity and the India story. Listen in.
I think the key is, for me, has always been, to find value. I mean, you want to, it's like your mother taught you to shop, ki rupee ki cheez 18 mein kharidni chahiye. And that's the same true in the stock market. You want to buy cheap. Now, fashions come and go. Sometimes it's eyeballs, sometimes it's replacement cost, whatever. But you buy good businesses and you're willing to hold them for the long time, I think you'll do extraordinarily well. And what these gentlemen taught me is that unless you risk running very far, you don't know how far you can run. And the trick for me has always been to push myself to buy bigger positions, to, there's a saying on Wall Street that bulls make money, bears make money, but pigs get slaughtered. But that's not quite true, because sometimes you need to be a pig in the market. When the conviction is the highest, when the trade is at the best point, you need to bet big, and then you need to know how much you make. Just when I started the Wizard show for the first time, I used to buy Bharat Electronics. It was a 20 rupee stock with a 2 rupee dividend built in, 160 crore market cap. It's 60,000 crores today. And I think it can go perhaps double from these prices too. So I mean, it's created long-term wealth. The mistake people make often is to bunch FMCG stocks versus all PSU stocks. These are all in disparate companies. There are some commodity stocks, there's some power stocks, and some defense stocks. So you need to learn how to pick the sector in the PSU that you're bullish on. I think the mistake a lot of analysts make is lumping them all together. So obviously you're going to come out with disappointing results. What if I bunched Himachal and Global and all those bad consumer stocks along with the levers and the Dowers of the world? Your returns wouldn't be that great. So I think that's a trap that a lot of people fall into. And these are good stocks, these are great businesses. The government, if you hear the Prime Minister speak or the Railway Minister speak, they're going to use the railway and the railway budget as a blunt axe for capital expansion. They're just going whole hog on these places. They're going whole hog on defense. I mean, for example, let me give you an example on defense and why it matters to India. The US produces 150 million artillery shells in a year. That's what Ukraine uses in a couple of weeks. So there's a huge shortage of defense equipment. And here these companies are already producing equipment and threatening to do more so by Atmanirbhar Bharat going more domestic source. So there's a great opportunity. They have good order books. They have excellent technological skills. And we are buying them literally, as I said, rupee ki cheez 54 mein, not even 18 mein. So, we're very confident about the play out in these sectors. A lot of what's happening in India excites me. And the reason for that is by just a freak of coincidence. We're at the right place at the right time.
And you can catch the all-new season of Wizards November 21st onwards only on CNBC-TV18. Let's slip into a break now. Up next, we'll get you all the cues from the commodities market. As always, stay tuned.